Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Norfolk Southern CORP quarterly report. Norfolk Southern Corporation offers a diverse range of transportation services to various industries. The company's portfolio includes agricultural products, soybeans, wheat, corn, fertilizers, livestock, and poultry feed chemicals, sulfur, petroleum products, plastics, rubber, industrial chemicals, metals and construction materials, steel, aluminum, machinery, scrap metals, cement, aggregates, automotive, finished motor vehicles, automotive parts, coal, intermodal services through various Atlantic and Gulf Coast ports, overseas freight transportation. Norfolk Southern Corp stock price increase. A year of strong financial performance, the past year has seen a significant surge in Norfolk Southern Corporation's NSC stock price, exceeding 15.13%. This upward trend is primarily driven by the company's strong financial performance and strategic productivity initiatives. Key factors contributing to this growth include consistent revenue and net income growth, positive financial results, and a commitment to operational efficiencies. Norfolk Southern's ability to meet its operating ratio commitments and raise its productivity targets has instilled investor confidence. The company's focus on cost reduction and efficiency improvements has also been a major driver of its success. With a 21% year-to-date share price return as of October 24, 2025, Norfolk Southern's stock price continues to rise due to its consistent financial performance and strategic initiatives. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth. The main contributors to revenue growth are increased automotive traffic, higher intermodal network usage, improved traffic mix and pricing, and merchandise revenue growth across various sectors such as automotive, chemicals, metals, and construction. Additionally, income from railway operations was boosted by insurance recoveries related to the Eastern Ohio incident. Revenue decline. On the other hand, revenue decline is primarily attributed to coal revenue decrease due to lower fuel surcharge revenue, unfavorable rate mix, and other factors. Intermodal revenue also decreased due to lower fuel surcharge revenue. Net income and profit margins experienced significant fluctuations between 2024 and 2025. In 2024, net income was $711 million, but it increased by 54% to $1,099 million in 2025. This growth can be attributed to improved profit margins, with income before income taxes increasing by $503 million and net income margin rising from 23.2% to 30.6%. However, the trend reversed in Q3 2025 compared to Q3 2024, with a 35% decrease in net income. This decline was accompanied by an improvement in the railway operating ratio percent, which decreased by -7%. The first 9 months of 2025 saw an 18% increase in net income and earnings per share, but this growth was offset by a deterioration in the railway operating ratio percent, which increased by 5%. These changes suggest that the company's financial performance is subject to fluctuations and may be influenced by various factors such as market conditions, operational efficiency, and external pressures. The company's financial performance indicates a consistent generation of positive operating cash flow. In 2024, the net cash provided by operating activities was $3,298 million, and this trend continued into the first 9 months of 2025, with a net cash provision of $3.3 billion. This demonstrates the company's ability to generate sufficient cash from its core operations, positioning it for long-term financial stability. The company's debt level and interest expenses have undergone some changes between 2024 and 2025. Notably, the long-term debt carrying amount increased by $123 million, while current maturities of long-term debt rose from $555 million to $607 million. Additionally, interest expense on debt saw a modest increase of $6 million, from $197 million in 2024 to $203 million in 2025. However, the total debt level remained unchanged between the two periods. The financial performance of railway operations has been mixed in 2025. On one hand, operating revenues have shown improvement, with a slight increase from $3,051 million to $3,103 million for the year, and a more significant rise from $9,099 million to $9,206 million for the first 9 months. However, income from railway operations has declined, with a drop from $1,596 million to $1,098 million for the year, and an increase in revenue but likely an error indicating a decrease from $2,940 million to $3,419 million for the first 9 months. In terms of performance, the regions that have done well are those contributing to the growth in operating revenues. Unfortunately, the data does not provide specific information on which segments or regions were responsible for this improvement. On the other hand, the decline in income from railway operations suggests that certain areas may be underperforming, but again, the data does not specify which regions or segments are affected. Management's outlook and strategy overview. The company's management has outlined several key points regarding its outlook and strategy. Notably, revenue growth is expected to continue with merchandise revenue projected to increase from $5,628 million in 2024 to $5,804 million in 2025. Additionally, the company will focus on cost reduction through software development, project rationalization, and technology function restructuring. Management also highlighted the importance of cash management, expecting to accumulate sufficient cash and cash equivalents throughout the review period. Furthermore, the company is optimistic about future traffic volumes due to a significant land sale. Overall, the strategy appears to prioritize revenue growth, cost reduction, and prudent cash management. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In the past 2 years, it has paid dividends totaling over $1.8 billion, with consistent payouts of around $915 million annually. Additionally, the company has engaged in significant share repurchases, including purchasing and retiring common stock worth $534 million in 2024, buying back 250 million shares, and repurchasing shares for a total of $6.3 billion in July 2025. These actions indicate a strong focus on shareholder value creation through both dividend payments and strategic share buybacks. That concludes the financial summary for Norfolk Southern CORP. Feel free to comment below, and I will be happy to answer them when possible.